So when do elite active traders trade at their worst?
Overtrading.
Okay, so when they're overtrading.
When they're on,
Until.
so on edge.
Okay. Anyone else?
When they're not planning their trades.
Not planning their trades, okay. And so I do want to create a context for how I'm going to answer this question, and I'm going to do it based on my seat in the trading community. Hi, I'm Mike Bellafiore, Managing Partner of SME Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. Click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up the free registration page in a new window. Don't worry, you're not going to lose this video. You can also visit tradingworkshop.com to register for this free, intensive, awesome workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education. So, as you all know in this room, but those who are watching at home don't know. So I run a prop trading firm. I co-founded SMB. We hire, train new traders. We've been doing this since 2005. Many, as you see walking around the halls here, have become really elite traders. Many become 7-figure traders. And one of the things that I do also is I coach selective elite traders outside of the firm. Somebody came up to me at the event I was at this morning and said, will you coach me? And I felt terrible because I didn't really want to say I only coach traders outside the firm who are 7-figure traders, but I actually had to say that. And so there are a select small group of people that I will work with, and I made that decision last year, and it was a really great decision because it gives me access to traders around the world who are trading different products. And these traders are elite, active traders globally and across products. And so from that seat, I've got to look at really terrific, elite, active equities traders here. And we also trade options and other products. But I get to look at those guys from the start. You know, they were like you at one point. And you know, our highest P&L trader last year was literally in your seat when he was in college. Same path that you went through. And so I see why they're doing well. A lot of the top guys here send me a daily report card. I can obviously see all their trades, when they're doing well, when they're not doing well, and we're helping them with the assistance of Dr. Steenbarger work through them trading at their best. And when you're an elite trader, it's not just about the setups for which you trade best, but it's also about you understanding how you perform best and what that entails. All right, so from that context, my observation is elite active traders trade at their worst when they trade their ideas, when they trade their opinions. I think yesterday, Current is going to trade down. You know, oops, yesterday, oops. I think MLNT, one of the traders is shaking their head who had his worst day to date, live. I think MLNT is going to trade lower, okay? Yeah, I mean, rational thesis, but didn't. I think Beyond Meats is overbought. No, it's not. I think the Slack IPO is going to trade down, catch support, and then trade higher. We'll find out. That's when they trade at their worst, when they just make trades off of their opinions. And you know, the very best trader here, that's when he trades at his worst, when he gets overconfident in what he thinks should happen in an idea, and he just gets into the trade. I'm right. When do elite traders trade at their best? And so for all you in this room, I look forward to presenting you with a black shirt like this. This is a black shirt that we presented to Swang. You get a black shirt when you net over $2 million in profits for a year. So I'm looking forward to that, and you should be looking forward to that one day. When do elite traders trade at their best? I'm looking at traders who are across products globally, different time zones, different firms, different countries. They were trained differently. What is that commonality that I'm seeing with these elite active traders? And I want to make that distinction. I'm talking about elite active traders. The presentation I did this morning, a brilliant investor slash trader went up and talked about how he does something nobody does in the marketplace. He breaks all the rules that traders ought to follow, and he's been very successful. But he's doing something different. He's more of an investor and a trader on a longer time frame, and that works for him, and that's great. I'm talking about elite active traders. And so what I'm seeing, based on our work, is that elite active traders trade at their best when they develop a thesis, plus they find a setup in their playbook, plus they see it, plus they fight for price, and that equals one good trade. That equals them trading at their best. And so by thesis, what do I mean? Let's give you an example. Elite active traders game plan their big trades. So we haven't actually done this with you guys in the room yet. We did it multiple times when our last training class started. And what it is an exercise in game planning. So, hey, what do we do if US-China solves its trade war? We're going to game plan that out. We're going to buy SPY. We're going to short volatility. We're going to buy FXI. We're going to buy BABA. We're going to go to our max buying power. We're going to swing trade it. We're going to game plan it. What happens if, this is quite topical, what happens if the US-Iran skirmish escalates? Maybe we'll buy oil. We're going to game plan that out. Okay, what happens if the Fed feels so much pressure from Trump that they surprisingly cut rates? Okay, we're going to get long. We're going to hit the buy buttons and we're going to get long. You know, if you're sitting on your desk and they announce a surprise rate cut from the Fed, we're going to get long. And you know, or what happens in the next meeting if they cut 50 basis points when 25 basis points was expected? We're going to get long. So you game plan out those big picture ideas. And that's a best practice that you want to use and co-opt into your trading, setting yourself up for those really big trade ideas. And you should be thinking about that. Like, those are just two small examples. What does a setup in your playbook mean? So it means, and again, what's another example of thesis? MLNT is overbought, or Beyond's overbought, or Kern's overbought. That would have been great today. Thesis, Kern's overbought, short today would have been great today, terrible yesterday. A setup in your playbook might be a backside short and a low float. It has variables. Wait for a kill candle. Wait for a lower high technical pattern. Holding below VWAP. Thesis now plus specific setup in my playbook that I'm looking for and that has specific variables for how I trade it. Example, kill candle, lower high, makes a lower high, holding below VWAP, short. Set up in your playbook. See it. What do I mean by see it? We want to see confirmation on the tape, confirmation on the level 2. And what does that sound like? It sounds like this from the daily report card of an elite prop trader. Quote, I'm going to get involved on this trade even at 8% and 12%, as that has me licking my lips, pyramiding in heavy, and here's the key, on the turn in this type of play. This was the best opportunity of its kind that I've ever seen. For that reason, I went big and shorted 80,000 as we turned. So traders recognizing and developing a thesis that this stock is up too much. Traders recognizing a setup, a technical setup, in his playbook, overextension. And then, he's waiting for the turn. He's waiting for the turn to get big. He's not just shorting it because of his thesis. What happens if he started shorting up 10%, up 12%, up 15%? You can get blown out. He's not just shorting it because then he's got a setup, technical overextension, which you can measure. He's also seeing it. Another example of seeing it, stock opens and the first move is down, tests VWAP and can't trade above VWAP, clear, change, and character. Words we use on the desk. Clear, change, and character on the tape. What you saw prior, you're not seeing now. Joseph, you talked about this in MLNT. What you're seeing today on the tape is very different than what you saw yesterday. Not the same algorithmic program that you spotted yesterday, and perhaps making all the difference as to why it's trading down so cleanly. Fight for price. An example of fight for price, we want to buy a breakout in AMRN. Good news, trades in a range. We're waiting for it to break out of a range. It does. It's holding above VWAP. We fight for price. We buy right above VWAP. We don't buy 50 cents higher. If we buy 50 cents higher, that's sloppy. I tweeted, for active traders, fighting for price is important as it sets your risk reward. This is particularly true as you trade bigger. This seems counterintuitive for large trading perhaps, but it's not. Okay, if we're entering 50 cents too high and sloppy with a lot of money on a trade like this, okay, our stop is going to be set based on our entry. The better our entry, the more risk we can put on. That's what we want to do. We don't want to sit around here dinkering around in little feeler trades. We want to put on size. We want to put on risk. We want to put on risk with good risk-reward trades. Whatever happens, it doesn't matter. We talked about this, how one of our traders put on a huge call position in Uber as it technically was holding up and breaking out. Didn't work. Fine. Good trade. I was talking about a trade I made in Chewy the other day. Shorted it, didn't cover it. Fine. Good risk-reward trade. Didn't work out. That's what we're doing. A failure to fight for price looks like this. This is from an elite SMB trader and his daily report card. Quote, sloppy today, bit overconfident given my recent run. Need to fight for price tomorrow, only entries at good risk-reward prices. Very common after a recent run to be overconfident, very confident, very, very common for that to lead to sloppy, poor entries. I've made $50,000 every day the last 5 days. What could happen today? It could get sloppy, and that could turn ugly pretty quickly. All right, so SME challenge for all of us. And before the event for Traders for a Cause today, a bunch of people came up to me and shared their frustration with some of the things that they're working on. A lot of them fall into the same buckets that all of us are fighting. FOMO, overtrading, missed the big trade, wasn't big enough. I'm sure none of us in this room have ever had trouble with any of those issues. And that's common. Those are the things that people struggle with. And one of the traders who I love, who is a great role model for the trading community and who I work with, has created a technique that we ought to use to help us with this. Now, this isn't going to solve all of your problems for overtrading and missing your big trade and not trading big enough, but it is one of the things you want to adopt to help you get better. And this trader, and we talked about this as he was developing it, this trader decided what his identity was. He sat down and he decided what his identity was as a trader, when he trades at his best. And for him, in his words, I'm a wait for the moment, intraday catalyst trader. My mantra is thesis plus setup plus see it plus fight for price. And he sits, after he's developed this identity, he sits for 5 minutes, sometimes longer, before each open, and he reminds himself of his identity. I'm a wait for the moment, intraday catalyst trader. My mantra is thesis plus setup plus see it plus fight for price. It's not enough to just intellectually understand that you should develop a thesis, wait for the setup, see it, and fight for price. You have to internalize that. And what great traders do is they take it even a step further. They develop an emotional connection with their importance of this identity for them. It's important for them to be a wait for the moment intraday catalyst trader. It's important for them to recognize their goals. It's important for them not to dinker around in feeler trades. They set standards for themselves about how they're going to attack each day. It's not acceptable for them not to live up to the standards that they have set for themselves. Their standards are to trade their identity. All of your identities are going to be a little bit different. Your cognitive and personality strengths go into you deciding what your identity is going to be. Some of you are going to work more with technology. Some of you are going to work very little with technology and want to just push the buttons. Some of you are going to do a little of both. Some of you are going to like options more. Some of you are going to like swing trading more. Some of you are just going to want to scalp. Now, you're not going to want to know about even what the company does. Just let me play. And that comes from your unique skills. But that has to be important to you. It has to resonate that it isn't okay. You know, dinkering around with a feeler trade is not just a bad trade. It's you not living up to your standards that you're setting for yourself. Hey, go ahead and click our subscribe button so you don't miss any of the videos they're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.